Yeah, don't mind me. I'm locked in my basement in Indianapolis right now. So fantastic duck work. Anyway, Eric Steager. I head up Anthem's corporate venture arm. I've been with them for about a year and a half after formally standing up Independence Blue Cross's corporate venture arm. My background prior to that was business school and iBanking. Thought I wanted to be an investment banker until I was one, which seems to be a common refrain in the industry. Business school, started out in venture capital, went to a family office to start their investment arm, and then went to the insurance company to help start their investment arm as well. So I've been on the early stage side for a number of years now. Like I said, I just relocated to Indianapolis from the East Coast about a year ago.
My name is Michael. I'm currently sitting in beautiful, sunny for once, Seattle, Washington. And a little bit about me is I just graduated college, undergrad, about a year ago, where I was very focused on entrepreneurship and running businesses, winning the Northwest Entrepreneur Competition. For the first year out of college, I was running a software business, software as a service, and then I recently pivoted to being an operations manager at a Series A tech company out of Seattle.
Nice.
Yeah, so I'm just very excited to be here. And then my question would be, I did a little bit of LinkedIn stalking, so I was going to ask, has your time as an entrepreneurship professor impacted your outlook on venture capital? And
I saw that question. That's a great question. I think it's actually my outlook on venture capital allowed me to get the entrepreneurship as an adjunct role. I just enjoy doing it. But it certainly has informed various structures that I've seen in the market. And I teach both external innovation. I've taught at Drexel and Temple. And part of the coursework is around leveraging joint ventures to minority investments to some option grants to deepen a relationship with a startup. So that's been interesting. But I wouldn't say that I came from an academia and that informs the VC. It was the other way around. That was an interesting question though.
Great, thank you.
So next we have Vishal here.
Hey everyone, how's everyone doing? So a little bit of my background, quick introduction. I'm a software developer. I've been working in the VC/PE space for the last 4 years. And my question to you, Eric, is how do you source deals? Do you use any tools for sourcing? Do you have kind of, what's your framework to find interesting companies?
Yeah, it's an interesting question. And there are a number of ways to source deals. And there's the Valley way that everyone talks about, where you go hang out at tech meetups and hope to find an entrepreneur and bring it in. As a strategic investor, so corporate venture capitalist, I'm a strategic investor with financial intentions, which simply means I am leveraging the commercial relationship of the mothership. So a lot of my sourcing efforts are developing the internal relationships, the business units, and finding out what startups they're working with. Conversely, now, one aspect of that is if my business units aren't forward thinking and don't want to work with startups, that's difficult. And then I have to act as a tech scout B to bring opportunities in. And then the sourcing opportunities comes from a network in venture, meeting entrepreneurs, word of mouth, those types of sources. And in my prior roles in organizations, some of that came into play where you were actively sourcing through those areas. But for now, in the past year and a half that I've been at Anthem, our business units are so forward thinking and like to work with startups. I've had plenty of deal flow from those business units and the venture relationships in my network that say, hey, by the way, we're talking to XYZ company, they're talking to Anthem. Do you want to meet them? In which case it's always the resounding yes.
Okay, is that all?
Framework. Vishal, did that answer the sourcing question? You also had a framework of how we evaluate them. Are you really speaking about a diligence framework?
Yeah, so that was my next question. One is like you said that via your network, word of mouth, as I hear mostly, is how you get to know about a company. The next question is, how do you actually evaluate them? Do you have you have set rules, or like how do you go about thinking about a company?
So I've found in my experience that the first phase of evaluation of a company is pretty similar to a lot of other VCs. I have a two-step framework. Phase one, generally I talk about the 6 M's, which is your market, your model, your management team, your moat, think a castle and the water around it. So your competitive advantage, what are your margins, what's the momentum? So that kind of framework begins to go, okay, what makes this attractive? It also depends on your style of investing. Are you looking for it has to be $1 billion market, or are you okay with more of a niche market? Depends on your style of investing. As a corporate investor, I can find a niche market to be attractive. I'm not hunting unicorns a lot of times. And then that moves into a second. If that passes those standards, it's an attractive market, attractive model, management team, et cetera, then we can get into a deeper dive around strategic alignment, upside potential, deal framework, valuation, et cetera. So it really is a two-step dance. And then the third phase is legal diligence. And because I invest in software, I don't spend a ton of time on IP diligence compared to other investors, but that would be the second half or the third part of the diligence. Post phase 1, phase 2, investment committee approval, then I dig into legal and IP.
Got it. Sounds good.
Mm-hmm. Thank you, Vishal. We will have William next with 2 questions as well. Well,
You're on mute, Will.
yeah.
All
I
right.
see your lips moving. There you go.
Thank you so much. Good morning, everyone. William from area here. So a little bit about myself. So I was a entrepreneur. I owned a family restaurant chain back in China. So I'm very interested for the VC for. So my question is right now, a lot of VC companies kind of slow their investing because the pandemic. So they kind of like taking care of their existing portfolio right now. So what do you think? So for the next step of the VC, so what's the what they're gonna do for the next year, like after pandemic? Thank you.
Thank you. So the question, to repeat it back, I mean, the velocity of deal flow is certainly slowed.
Yeah.
I have certainly struggled and will continue to struggle with this Zoom world that we live in, because part of a lot of venture is pattern recognition. Part of it is also looking someone in the eye and going, okay, how do I develop? It's just like dating. How do I develop a relationship? How do you build trust? How do I begin to understand the gaps in the management team and people's strengths and weaknesses? And maybe someday I'm replaced by an AI-based algorithm and they all do the investing. I don't know. But it's very difficult to replicate the in-person experience spent over multiple hours, multiple meals, learning about an individual that I'm about to invest several $1 million into. Because at the end of the day, it's, do I trust the management team to do what they said they're going to do? That's really what we're doing. And that is difficult to achieve in a Zoom world. It is getting done. I mean, people are doing it and people advertise it that they're doing it. But I think a lot of talking to my other VC brethren, it's based on relationships and people that we've known that are getting done in the past 6 months. I think the back half of the year may slow. The flip side is we've been highly distracted triaging our portfolio and understanding who's impacted, because candidly, some companies have done well throughout COVID. Some are struggling, some are neutral. So first part of the year was really triaging and getting deals done that we had relationships with. I think the back half is going to be slowing, but I could be wrong. Maybe people have a greater risk tolerance than I do, but I'm struggling with it. And I would imagine the second half would be slow going into next year, because that top end of the funnel begins to slow, even with the ones that I'm getting from my business units, which then conversely means if deal flow slows, hiring will slow and the deployment of capital will slow, because everything in venture around hiring is hinged off of your next fundraise and your next fund. particularly at the partner level. But unless you have a 2-year rotation where you're out to go to business school or something, the hiring may slow.
Yeah.
Which I'm sorry, it's not really what people trying to get into the industry and those of us in the industry want to hear, but it's a challenge right now.
Right, definitely. So my second question is that obviously right now, so we can like meet like the owner face by face. So probably you using the Zoom a lot. So what's the difference between like you use Zoom to meeting people and face to face? What do you think? Which one is more effective?
Well, I mean, based on what I was just articulating, I don't think Zoom is effective. When body language and relationship building is 80% body language, communication, subtle cues that we've learned over time versus I'm staring at a head with a cheesy ductwork behind me. It's difficult to really build that. That's just one person's opinion. I do know some people have closed deals sight unseen, and we may, if this continues going forward for another 18 months, that may be difficult. But yeah, I'm not a huge fan of the Zoom world in terms of, again, building that trusted relationship. But that may speak to a generational issue, to be honest.
Eric, what about the performance in terms of, do you have more meetings with with Zoom? Because many entrepreneurs say that they have had an opportunity to pitch like times more VCs over Zoom rather than in person in the past.
The answer is yes. I mean, that 30-minute block of time, you don't have to worry about travel. You don't have to worry about logistics. So it is a more concentrated calendar. And you can, if you're an entrepreneur raising capital, you can certainly fit more meetings in. I don't know if they're more productive or efficient in terms of, again, building a trusted relationship where, again, at the end of the day, our responsibility is to oversee several $1 million, multiple millions of dollars going into a management team with a vision. How do you develop trust and belief that they're going to do what they say they're going to do over Zoom? I'm not saying people aren't doing it. I'm just saying I struggle with it.
Okay, thank you for that. So Tisha, our next speaker.
Yeah, hi everyone, Tisha Garcia.
Hey, Tisha.
I'm here, hello. I'm here in the San Francisco Bay Area. My background, I've been dabbling within program management, product management, mainly within software and tech companies.
Mm-hmm.
So my question for Eric, one, have you witnessed a company that was at high risk and struggling to launch, yet they were able to course correct rapidly and mitigating? And if so, what factors would you attribute to their success?
That's a great question. Have I seen a company course correct early? And yes, I mean, companies pivot all the time coming out of their alpha to beta, beta to general launch, even general launch. If you think about the risks within a market, you have a technological risk. Can I build something? Can I identify a pain in the market for that technology to address? And then can I actually sell the product and convince people that this is a pain and the product works? And yes, I have seen where the initial product features, functionality, or even area that they're looking at was wrong or wasn't gaining the traction, but they started nibbling at the edges and in talking with their potential customers and users, they identified a different area of pain and went that way. So part of it, what did they recognize? They moved fairly quickly and they listened. Conversely, I've seen companies not pivot and continue to say, this is what, not recognize sunk costs, not listen to what the market's saying. And they had a hubristic attitude, particularly around the leadership of the management team, to say, no, I know better than the market. If you would have asked people at the turn of the century what they wanted, they would have said a faster horse, not a car. I see a vision. And again, this is where you start getting different styles of management, different styles of investing, different types of companies. Those that are truly visionary take some time, but you may want to research what the Newton was, which was the old Apple that was ahead of its time. So some people I've seen it not pivot. And that's been more difficult. But again, it's listening, it's speed, it's the ability to recognize that you don't know everything, and a humility to react to that. Does that make sense?
Yeah, thank you, Eric. And then a second question, what do you
Sure.
look for in general for within the VC industry? What do you look for when assessing a candidate who would be suitable for a career in VC?
Yeah, I know
The
just
hiring.
recently we were trying to help Eric to find an associate up north, which was quite difficult.
Yeah, so in Midwest, trying to get someone to relocate was a challenge compared to the coastal sides. So here's 3 ways I tend to evaluate a candidate, and it speaks to the career choice in general. First off is the ability to be comfortable in both qualitative and quantitative, both communication and research. We all have our preferences. We all gravitate towards maybe a softer qualitative approach, say strategy versus you have the finance folks, quantitative. I'm looking for someone that is equally comfortable because at the end of the day, we're evaluating the company from both metrics. I'm looking for someone that is comfortable being more of a generalist. And what I mean by that is the typical career path is you start big funnel and narrow down to the point where you're an expert in one particular item. As an investor, we're a generalist, meaning I need to understand a market, a management team, operations, sales, human resources, legal. So I'm a mile wide and inch deep. I'm also comfortable being wrong and recognizing to say, I don't know. A lot of people aren't comfortable with saying, I don't know, let me go research it. So there is that inclination towards being comfortable across multiple spectrums versus an expert. And then the last one that I really look for is, and Dave Ramsey, who's a financial advisor, kind of says, always references the heart of a teacher, but I like that quote, but I also look at, are you comfortable being a coach versus the athlete? Meaning, as investors, we're on the sidelines. We can give capital, we can give advice, we can give open doors, but at the end of the day, you're not on the ground executing. You need to be comfortable with the management team executing. And when they succeed, you have to be comfortable going, that's awesome, and I'm happy for you. So there's a coaching mentality versus the rock star personality, comfortable being behind the scenes. Now there are many in the industry that have a bigger personality and want to be known, but a lot of times called the Midwest work ethic. I don't know, but you have to be comfortable coaching rather than executing, and not everybody has that. So it's those 3 areas that really I key on when I'm speaking to potential candidates. And Renata, I'd love to hear your thoughts if you have a few moments, if how that lines up with what you've seen successful candidates be.
Yeah, I wanted to mention that even though you were looking for a junior position, right? So you were still expecting this person to be quite mature. So what you have just described, it's not something common, honestly, because many people think that, you have been an intern at an investment bank, or you have just graduated and you're ready to go and become a VC associate. And it's not always true, but sometimes it's true, because some firms, they're too big and they're hiring for an even more junior position, which is VC analyst. So this is probably, where we would expect graduates to go, right? But although you're a corporate VC firm and Anthem is a huge company, but I think that your particular department is not too big, right? So
No, there's 3 of us.
Right. So you are, like a very small VC firm. So you don't have analysts and associates. So you are expecting to hire only one associate, and you're expecting this associate to be more mature, in his or her career development and mental development. So
Agreed.
that's my take on it.
Yeah, and I will say this, and I referenced it earlier. The Valley is one ecosystem, but there are plenty of venture opportunities outside of the Valley, of all shapes and sizes. So to Renata's point, there are a number of small firms out there that will allow you to take a bigger role. Like my analyst just came out of undergrad last year. So I have an analyst, I have a manager who helps on the execution side, and it's myself. So just recognize there's two landscapes and ecosystems out there, and don't be afraid to evaluate both if you're really looking to get into the industry. But you're right, Renata, that I absolutely was looking for someone with modeling experience. So that 2-year investment bank program is helpful. You just have to navigate some of the personalities that come out of the investment banks and their expectations.
We have another question about VC career, but it's going to be our next speaker. For now, I would like to let Bharadwaj to speak, and he has 2 interesting questions about the health tech sector.
Okay.
Hey, Eric, and hey, everyone. So I'm halfway across the globe in India. So I'm currently at a B school, like one of the premier B schools here, and I've interned with a PE firm called TRG. It's based out of New York. So they invest in emerging markets in power and infra sectors. So Eric, I'd like to ask you 2 questions. So when healthcare data is prevalent, and how do you see AI and ML disrupting the health tech space with respect to radiology, imaging, and telemedicine? So this is my first question. And second question is, I'm sorry.
Do you want me to answer both, or one at a time, or do you want to ask for both?
Yes. Second is about ethics of using.
Let's do one at a time, guys.
Okay. So the AI or machine learning, I think it will actually impact physician decision-making quite a bit in terms of augmenting, again, thinking back to the core, it's physicians bring pattern recognition. They've seen this before, therefore they think it's this. That is what machine learning is all about, is pattern recognition and learning from each one, and just at a much faster pace. So I think the clinical decision support area, leveraging AI, will certainly be impactful and allow greater accuracy, greater speed of processing. Do I ultimately think it will replace physicians, which is not the question, but it's the second part of that commonly asked question? I don't at this point in time, because there's an empathy, there's a communication, there's a comfort nature of what physicians do that cannot be replicated. But in terms of decision making, it will certainly, where there's pattern recognition, it absolutely comes into play. And we've seen it already, whether it's breast cancer identification, whether it's dermatology. I mean, it's been applied in a number of areas and continues to improve.
So my second part is about the ethical conundrum of using healthcare data. So,
yeah, I saw that question, and it's continued to give me pause on how to answer it. Because the data that we use tends to be called de-identified. So yes, there's a 50-year-old male with prostate cancer. That's one aspect of healthcare data. The fact that they live in New York City at this address with this name, with this phone number, is generally not included. So you take it from a population health standpoint, then I have less of an issue, that ethical conundrum, as you put it, with it. When you start looking at some of the public health conversations that are happening now around contact tracing, around privacy, around truly leveraging personal identification and personal information, that is a struggle. But recognize that the industry has separated the two for now into de-identified and identified data. So I have less of an issue with the de-identified and more of an issue with identified. Question is, those privacy concerns are with any type of data that's out there, up to and including, I mean, if you look at the Google ads, was looking at a trip for Fiji. Next thing I know, I continue to see Fiji ads for the next month and a half on my search bar. Did I answer your question?
Yeah.
I want to make sure I addressed it.
Yeah.
You're on mute, Renata.
Thank you. You're just really good at that. So we have our last question from Rostislav. It's about career and it's pretty tricky.
Yeah, good day. My name is Rostislav. I have two different backgrounds, one in Chinese studies and another one is in economics. And I'm currently working in a rating agency. And at the same time, I have already been applying a lot in the US, Europe, and Asia for venture roles. And I found it pretty difficult to get into this field. And this field is pretty notorious for that. Mm-hmm. And that's why I would like to ask you a question about how is it possible for a foreigner to get into the venture field in the US while he or she is abroad and just sending CV or connecting or LinkedIn? And what ways could be the most productive and efficient so that to get into this field?
Wow, that's a great question and a difficult one. Because you touched on it. This is a very challenging industry to get into, and it just goes back to supply and demand, to be honest. There are very few openings within in venture. Everyone seems to want to get into it, whether the investment bankers, the lawyers, the accountants, the transaction associates, they all want to get in. So there's no shortage of supply at the entry level. There's just limited demand because it's tied to, well, I don't really hire unless I raise my next fund, or in general, there's not that many of them. So it's difficult to get into the industry in general. I think if you talk to a lot of folks, they say they got lucky to get their break into it. I say I got lucky getting into it. That's a story for another day, but I was absolutely fortunate to break in. Once you get in, you can move around. So that ties back to can someone break into the industry remotely? And whether it's you live in India and you're applying in the States, or you live in Indianapolis trying to get into Boston, it's difficult because of the supply that's out there. And I wish I could sugarcoat it and say, no, there are ways you could break through those issues. There's none off the top of my head other than possibly what I was saying earlier of once you break in, your resume and your CV stands out a little bit more because you have the experience. So it's almost find something in your home market, start angel investing, have success there, or don't be afraid to go in as unpaid analyst or work part-time and offer your skills up to a local shop to really get that credibility and say that you've honed those skills. But it's about creativity, it's about work ethic, it's about happenstance. And the last one is the most difficult one to really get your arms around. I struggled with it. I got into venture later in my career. I didn't do the 2-2 B school and then right back into it route. But it's possible. You just have to keep working at it. But it will be different. Yeah, go ahead, Renata. I'm sorry.
I'm sorry. While we're at it, so if you don't mind me asking, how old were you when you got into VC?
Oh, wow. Now you're dating me. I was about 30.
Okay, because I've had another question, actually just a remark from another student, and he mentioned that he had been told that it's at some point it's too late to get into venture capital. So like, he had been advised to just forget about it.
Yeah, so I've heard that more times than I can count when I was trying to get into it. When I was applying to the typical established funds, I was given well, if you're not partner or in venture by your mid-20s, because you get in, it takes 10 years for you to make partner, so now you're 35. Well, you're a junior partner for another 10 years, and recognize the funds have 10-year life cycles. So the time they raise the next fund, let's call it your early 40s before you're a full partner, and then they view you as only having 1 or 2 funds left before you ride off into the sunset. Fantastic ageism in the industry, but they assume you're done by 55. You're out and you can retire somewhere. So you only have 1 or 2 funds. And that was the math that I would explain to me on how do you get into the industry and being too old. Okay, so I recognized that coming out of business school. I started business school later in my career. I was the first person in my family to go to college. I didn't know what I was doing early in my career. So I actually started a search fund and raised capital, and figuring best case scenario, I've raised capital, I've invested, and that gets my investment career. Worst case scenario, it doesn't work. I've been fundraising, deal sourcing, doing a lot of what VCs do, and that I break that into my career. And literally I was able to find a small shop. I moved from Chicago to Philadelphia. When I say unlucky, they were only looking for Wharton applicants, and they hit the wrong button on the hiring, where to post the job to, and it went to University of Chicago instead. So literally someone fat fingered a job spec, and that's how I learned about it. And I was able to make the move, and that's how I got my venture start. It's hard. I got lucky, but don't be afraid to think non-traditionally. And just because you're not in that typical career path doesn't mean you can't get into it.
So
It just may be a different way to do it.
Do you think that there is an age limit when you just should stop looking for a job or breaking into venture capital?
No. But again, you may get into it a different way. It may be you're not that 20-something analyst. You
Right.
had to cut your teeth as an angel investor, or working with a family office, or
as an
and then
expert in any other field.
Correct.
Okay, so let's just be mindful about our time. It's exactly half an hour, so thank you very much for being with us.
Thank you for having me.
Yes, absolutely. We will be looking forward to your lectures as we have discussed. And I would like just everyone to wave your hands, just, to thank Eric.
Thank you for having me, Renata. This has been enjoyable. Good luck, everyone. Keep at it. Just don't be flexible and creative.
Okay. Thank you very much, Eric. Have a great day. And
Thank you,
everyone,
you too.
have a great day too.
Bye.